What is your assessment then of this change in stance for the Fed, the implications for central banks here, and whether or not it's going to push those central banks in this part of the world to monetary policy normalization at a faster pace than maybe some of us may have expected?
There's no doubt the Fed was more hawkish than anticipated at the FOMC meeting. However, what the Fed has done is provided the market notice that they are only beginning discussions around tapering. Actual tapering is still some way away. We believe it's going to be sometime in early next year. And rate hikes, importantly, while the dot plots have been brought forward, we are still looking at 2023. So we have a long runway to go. And that's not necessarily going to put pressure on central banks in this region, although it has put central banks in this region on notice to ensure that they have their defenses up to scratch in order to mitigate any volatility that eventual Fed policy normalization will bring. We have already anticipated central banks in this region to begin hiking sometime in 2022 anyway, and I don't think the Fed's recent hawkishness will alter that timetable.
Okay, how closely should we be scrutinizing outflows from this region? There's a big story that's being ramped up a lot by strategists we talk about in terms of that demand for assets here in China, particularly because of the yield differential. Is there a concern that we may start to see outflows, if not from the Chinese market, then the broader Asian market as a result in this shift?
We are definitely monitoring the flows picture in the region very closely, especially after what happened in 2013 during the taper tantrum. However, I think there's one important notable difference. Prior to May 2013, during the taper tantrum, the region experienced massive amounts of inflows, and therefore that's what caused the outflows and the volatility in markets during that period. Contrast that to now, we actually haven't seen the sorts of strong inflows coming in. In fact, on the equity market side, there's been largely outflows apart from China. So therefore, I think the potential for further outflows is a lot more limited this time around. In addition, I believe that flows into China will remain very robust, and it's partly because of obviously the upcoming index inclusion into WIGB on the Chinese government bonds. I think that will continue to encourage further bond inflows into China. And with US yields still fairly well behaved, 10 years are still consolidating around these levels, they're still going to make sort of carry trade somewhat attractive. And again, high yielding markets such as Indonesia, for example, I think we'll still see plenty of foreign investor interest.
Khoon, David here. Since you brought up yields, I need to ask you, quite puzzling, why do you think long end yields are dropping? You look at the Treasury market, you look at flatter curves, massive move down into 5 and 30s overnight. What's happening there?
Yeah, I think part of the narrative is the fact that now that the Fed is more hawkish than anticipated and willing to bring forward rate hikes, that's taken pressure off the long end, because I think the fear in the market is that if the Fed were to delay hiking, that's going to force them to hike more aggressively when the time eventually comes, or that's going to put further inflationary pressure in the system, and that's what's been causing 10-year yields to go higher. Now that the Fed is willing to, I guess, be a little bit more preemptive, I think that's taken pressure off the long end, and it is quite natural for curves to flatten as we get closer towards eventual Fed rate hikes anyway.
Okay, final question for you, sir. I mean, I would imagine it's too simplistic to ask you whether the dollar has bottomed. But what do you think, what would you buy? What would you buy the dollar against?
Look, in this current environment, obviously near term, we probably might see a little bit more strength in the dollar, but I still very much favor Asian currencies. I think within the EM complex, definitely you're going to see some pressure, particularly those that have run large current account deficits or are still struggling structurally in terms of their economies. But I think within Asia, you still have pockets of strength, particularly the export-orientated economy. So I still very much favor the yuan. I still look for the yuan to appreciate towards 630 by end of the year. I still very much like the Korean won. It's obviously weakened recently in light of the Fed's hawkishness. But I think the BOK will be the first central bank in this region to hike rates. They've turned hawkish as well. Exports are growing exceedingly well. And I'm looking for the won to eventually strengthen. So I favor going long those two currencies.